Hey everybody, Andrew Willits with Keller Williams Realty here in Madison, Wisconsin. Thanks for tuning in today. We're talking about money matters. So when you're buying a new house, money really does matter. So one thing that you really need to do is you need to know what your finances are. This is a huge thing because it not only determines how much house you can afford, but it also determines what area you can afford to live in. So you want to make sure that you know your finances kind of in and out. This takes some work, and nobody's going to do this for you. So the very first thing that I always suggest somebody does is I always tell people meet with a lender. You might think that hey, you know what? I bank with XYZ Bank. I want to stick with them, and I want to use them as my lender. Or some of you might even think that you have to bank with a certain institution in order to get a loan, and that's simply not true. There are a multitude of lenders out there. Some of them are those banks that you're familiar with. Some of them are not. And not all lenders are created equal. They're just not the same. Some lenders will offer certain loan programs that other ones do not. They all kind of offer the same basic set of loan programs, but they oftentimes will offer additional ones, especially if you go with a smaller local mortgage lender. So some things that you want to keep in mind is that lender is going to need a lot of information from you. If your lender is willing to give you a pre-approval after a 10-minute phone conversation and they didn't ask you about your finances and they didn't ask you for certain things, you should feel like they're asking you for a lot of information and asking you to send documents. If they're not asking you to do that, they're not doing the work up front. And that's a bad thing, because what you want is you want a lender that is going to do all of that work up front. So when they tell you, yes, you're pre-approved for this amount, you have a very, 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 very slim chance of not actually being able to get a loan for that amount. It's a horrible feeling when a buyer finds out a week prior to closing that they can't buy the house because they can't get the loan. And that's horrible. That's a domino effect that is horrible for everybody involved. And it's basically because some lenders don't do that legwork until the very end. And you want to make sure that people do that right up front. So once you have met with a lender, you've gotten that pre-approval, yay, you can afford a house. And you might find out, for example, that it's a $300,000 house that you can afford. Well, that's fantastic, and that's a great starting point. But now is your chance, because like I said, nobody's going to do this for you. Now's where you need to really drill down and see what your finances really are. So you might be able to afford that $300,000 house on paper, but to be able to keep living the same lifestyle that you want to live and to be able to live comfortably, you might not be able to afford that. You might only be able to afford a $225,000 house. Who knows? So you really need to create a budget. To do this, just go on your computer. Hopefully you have an Excel program, or like on a Mac, a numbers program, and just go line by line. Say, what are my monthly costs? So what's your monthly cost for groceries, utilities, cable, cell phone bill? What's your car payment? How much gas do you use every month? Your health insurance. Maybe you don't have health insurance through an employer. Maybe you're on the Affordable Care Act. What do you have to pay every month on that marketplace to be able to have health insurance? And then also don't forget to figure in there how much you eat out and entertaining things. Maybe you go to concerts, movies, games. Or maybe for you, you're not going and eating out, but you're going out and having drinks with friends. That's entertainment. And that all costs money. And I know you know that, but sometimes we don't really figure out how much we're actually spending and where those things are going. So do all of that. and figure out what is that monthly cost that you spend. Now, there's some of your regular bills that you want to figure in there too. So, for example, I have health insurance that's twice a year. Or sorry, not health insurance, car insurance that's twice a year. I pay for it at 6 months at a time. Well, I'm going to take what I pay annually, divide it by 12, and there's my monthly cost. Same thing for my dogs. I have 2 dogs, and I have to take them to the vet once a year to get their shots. Well, that comes at a cost. You might have some additional medical costs, or maybe you know that you get sick about 3 times a year, and you know you spend about X number of dollars in co-pays to go to the doctor and get prescriptions to get better, or maybe for your family. So another thing to think about is vacations. Another line that you put on there is how much annually do you spend on vacations, or kind of that recreation cost. So for me, I don't take a lot of vacations. I'm pretty much here in Madison working for my clients all the time, but occasionally I do. Every year I take a few days off and I go camping up north with my family. Well, that comes at a cost. So what is that cost? You can put that in there and total up all those costs that you have with that, divide it by 12, and that's how much essentially a month you are needing to do. You hear I keep on going back to a month because that's going to be really important to figure out, because you're going to need to know how much money you're spending each month, even if it is one of those not monthly costs. So there's 2 more things I want to talk about with your budget, 2 more items to put in there. You want to make sure that you have what's called a contingency fund. If you've never owned a house, you might not realize this, but homes are not self-sustaining. They require maintenance. And even if you maintain your house like perfect, you are the best at maintaining your house, that water heater is eventually going to putz out and it's going to fail. And you're going to need a new hot water heater if you want to have hot water. And nobody's going to pony up that cash for you. You have to do it. So putting away a small amount of money every month into a contingency fund is extremely important. And having that money earmarked for the house, for when things happen on the house. This past summer, I was doing my due diligence and had my air conditioner serviced, and I have it serviced annually. Well, the technician came in and said, "I got some bad news. All the wires have been chewed through by mice in your air conditioner outside the condenser unit, and it's an old unit, and it doesn't make sense for us to try to repair it. You need a new unit." Wow. Okay, I'm glad that I had that money set aside already for when that happens. The last thing I want to talk about when making your budget is we are a generation of instant gratification. With just everything that goes on now, it's instant gratification. Something that's not instant gratification that you really need to do is you need to set aside a little bit of money every month and put it into a savings account. You need to be saving for your future. You might want to take a vacation, a larger vacation one day. You might have aspirations to own a really nice car or something, or possibly you want to buy a cabin up north. Well, you're going to need money to do a down payment on that, and you're not going to have that money if you don't save for it. So making sure that you save. At minimum in your savings account, you should have what's called an 8-month emergency fund. So an emergency fund is basically, if I have an emergency fund set up, I know that that emergency fund is going to cover all of my expenses that I have to live every month. And I need that to last me for at least 8 months in the event that something bad happens, that where I can't work, or maybe I get laid off. Something bad happens, I want to make sure that I don't lose this house that I just bought. That's going to be really hard to do if I'm living paycheck to paycheck and not building up a contingency fund, not building up a savings account. So now that you have your budget completely created and you know what is that monthly cost, you might be renting right now, or you might own your own home and you might currently have a mortgage payment. Well, don't have that into your budget. Say, okay, I'm now pre-approved for $300,000. Well, my lender told me that my monthly payment will be right at about X number of dollars. Take however much money you are spending each month and add to that amount that your lender said your monthly payment is going to be. Do you at least make that every month? Do you bring that much money in? You or maybe your spouse, do you combined make enough money to cover that? Because if you don't, then that means you're going to have to change your lifestyle. You are going to have to adjust how you live to be able to afford the house that you technically on paper can afford. Okay, does that make sense? So make sure that when you are doing this budget that you account for everything. Try not to leave everything out. I said it before and I'll say it again. Nobody's going to do this work for you. You have to do it. So sit down, take the time to do it. It's going to be well worth your while. And if you have any questions about this, please feel free to contact me, Andrew Madison, Realtor at gmail.com, or you can call me 608-535-9909, or you can even just message me on here. Until next time, I'm Andrew Willits with Keller Williams Realty in Madison, Wisconsin, and hope you have a great rest of your day.